problem is, like I said, is people didn't understand it properly. The role of the government, and the economic policies of the government and their long-term impacts of that changed. The Great Depression fundamentally changed how we view the role of the government in the economy. Before this, there was generally laissez-faire policies of the 40s, which basically is like free markets. Like let's let the government not meddle too much, and let's just let things go free, which is the good way to do it. However, because things got so bad, then the people didn't like that. And then the people wanted the government to come in and do something, anybody, just make it better. What they didn't realize is that the more the government did, the more they intervened, the worse things were getting, which is exactly what I'm trying to arm you with, so you understand how this works. Now, some of the things, so like the New Deal, initiated by FDR, very mixed success. It did seemingly provide some relief, and it did create jobs, but it didn't end the Great Depression, right? But it did create the social safety net of regulatory frameworks that we have, as I said, like the SEC, Social Security, FDIC, et cetera. It did massively increase the size of the government, and this is a big deal, because today the government is making up about half of the economic growth of the country. And it's part of the reason why the Fed doesn't have control over the spending and the growth of the country anymore like they did back then. But really what we saw is, like I said, this shift in the perception of the people. And this is what I want to hit home for you here. Because things were so bad, like I said, the people wanted the government to help. Give us some assistance. Give us some help. Give us more jobs. Help us with the prices of our crops, all these things. But every time they did more of it, things got worse. Protect us so we don't have too much supply coming from overseas. So the government puts in tariffs into place. But then those tariffs then limited the imports and exports, and it also threw the rest of the world into a tailspin. And so in a complex system, you have to understand that everything you do has unintended consequences. You can't just affect one thing, sort of like the body. The body is also a complex system. So if you go to the doctor and say, I have heartburn, for example, they can give you a prescription for that heartburn. But if you look at the prescription or read it, you'll see all these side effects that you could get. Headaches or dry mouth or, sick or even death or whatever, right? So there's unintended consequences that I'm doing to my body to fix one thing. And that's exactly where the economy is. So today we sort of have already we're starting to see, the Biden White House is saying that the inflation that we're seeing is not caused by the government. It's not caused by the government spending or the Fed. It's you. You're the one causing the inflation. You're the one that's buying too much. You're the one that's spending too much. They're starting to spend that one. The one we've been seeing for about 2 years now is it's the greedy businesses. How dare these turkey manufacturers gouge you on Thanksgiving? How dare these oil companies gouge you on the price of gas or any other company? They're saying these companies have record revenues. Look how much money they're making. Well, they're making record revenues because of inflation. It's not profits. So what do I mean by that? Let's just look at the iPhone, for example. Say it's $1,000. If I sell 10 iPhones, if Apple sold 10 iPhones at $1,000, they made $10,000 of revenue. Now, let's say because of inflation and supply chains breaking down, the cost of their goods went up, and now they sell 10 iPhones for $2,000. Well, now they made $20,000 instead of $10,000, but the economic output is still the same. It still was 10 iPhones. It was still the same amount of people working the same amount of hours to produce the same amount of iPhones, but instead of 10,000, they were 20,000. But that is the revenue. It's not the profit. What we're seeing in most companies is, though, even though their revenues are going up because the cost of their goods, services, labor, shipping, etc., while their revenues are going up, the GDP is going up, their profits are actually going down because the cost of their inputs has gone up. The cost of their labor went up. The cost of their shipping has gone up, and all of these things. And so as an investor, when you're looking at these companies, and you're looking at earnings reports, which you should be looking at, you have to understand to sort of cut through the noise. And you want to look at these companies and you want to see their revenues going up, but then you really want to look at the profitability. And so we're starting to see these narrative shifts. Like I said, the greedy oil companies, the greedy turkey companies, et cetera, pillaging us, kicking us while we're down, extracting massive amounts of wealth, gouging us, as Elizabeth Warren and Biden would say. But here's the way a free market works. You see, if a turkey company or an oil company or whatever business you want to fill in the blank with, if they were really raising their rates extremely high and gouging you, as they want to say, if there was all this profit they were making in a free market, other people would come into that market to get some of that profit. So if I'm used to making $50 of profit off of you and now I'm making $200 of profit, other people are going to come in to compete. They're like, well, shoot, if this guy's making $200 of profit, I'll come in and I'll do it for $100 of profit. And someone else says, well, shoot, I'll do it for $50 of profit. And someone else says, I'll do it for $25 of profit. And then we have a competitive landscape. There is no way to gouge somebody in a free market. Because if you do, someone will come in and eat that profit. It's only in a government protectionist regulated market where they can protect those profit margins. Big businesses working with the government to put policies into place that prevents free markets from happening, that prevents competition from coming and eating into those profit margins. Now, that's not what the government tells you. Just like they didn't tell you in 1929, they're telling you the same thing today. Even though we caused the problem, even though, yes, the Federal Reserve made made much too much of an easy monetary policy. Yes, because between the Federal Reserve and the Treasury, we spent $10 trillion and we caused massive amounts of inflation. Yes, because we shut the economy down and supply chains got wrecked. Because of all those things, we caused massive inflation. But don't worry, we got your back. Now what we're going to do is we're going to slow the market down just like we did in 1929. And you know what Einstein's definition of insanity is? Doing the same thing and expecting different results. So if we do the same thing, we should get about the same results. We're going to see stock markets crash. We're going to see economic activity slow down. And then what we're going to do is we're going to get involved in the markets and we're going to say, hey, it's these greedy businesses that are doing this. It's the tariffs. It's the trade policies. We need to tax tariffs. We need to limit trade. We need to re-onshore things. The exact same thing. So just know that when you see this, you can say, I remember this. I've learned this before. I understand that it's not the free markets that have caused this. It is the government intervention. And so while you're looking for more government, while you're looking for politicians to fix the problem, you have to understand that it's not them fixing the problem, it's them creating the problem. So how can they solve us? How can they fix the problem that they're creating? The only way would be to get out of the way and let the market correct on its own. It'll be severe, it'll be swift, and then it'll be over.